Hey everyone, I hope you guys are doing fine. I welcome you all to the day 13 of CA Inter question series, and today's topic is Essay 320 Materiality in Planning and Performing an Audit. So let's get started.
Question number 1 is you are being appointed as an auditor of Track Limited for the first time. You want to determine the materiality level, and for that you have applied percentage to choose benchmark as a starting point in determining materiality for the financial statements as a whole. What are the factors that affect the identification of an appropriate benchmark? As per SA 320, materiality in planning and performing an audit prescribes the use of benchmarks in determining materiality for the financial statements as a whole. Determining materiality involves the exercise of professional judgment. A percentage is often applied to a chosen benchmark as a starting point in determining materiality for the financial statements as a whole. Factors that may affect the identification of an appropriate benchmark include the following. First, the elements of the financial statements. For example, assets, liabilities, equity, revenue, or expenses. Second, whether there are items on which the attention of the users of the particular entity's financial statements tends to be focused. For example, for the purpose of evaluating financial performance, users may tend to focus on profit, revenue, or net assets. Third, nature of the entity, where the entity is at in its life cycle, and the industry and economic environment in which the entity operates. Fourth is the entity's ownership structure and the way it is financed. For example, if an entity is financed solely by debt rather than equity, users may put more emphasis on assets and claims on them than on the entity's earnings. And the last is the relative volatility of the benchmark. Question number 2 is whether misstatements of lesser amounts than materiality for the financial statements as a whole could reasonably be expected to influence the economic decisions of users taken on the basis of the financial statements. Explain. Factors that may indicate the existence of one or more particular classes of transactions, account balances, or disclosures for which misstatement of lesser amounts than materiality for the financial statements as a whole could reasonably be expected to influence the economic decisions of users taken on the basis of financial statements include the following. First, whether law, regulations, or the applicable financial reporting framework affects users' expectations regarding the measurement or disclosure of certain items. For example, related party transactions and the remuneration of the management and those charged with governance. Second is the key disclosure in relation to the industry in which the entity operates. For example, research and development costs for a pharmaceutical company. Next is whether attention is focused on a particular aspect of the entity's business that is separately disclosed in the financial statements. For example, a newly acquired business. Question number 3 is while conducting the audit of Smart TV Limited, engagement team of HTR and Company has considered materiality and audit risk throughout the audit. Discuss explaining the meaning of audit risk. Audit risk is the risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. Audit risk is a function of the risks of material misstatement and detection risk. Materiality and audit risk are considered throughout the audit, in particular when first identifying and assessing the risks of material misstatement. Second, determining the nature, timing, and extent of further audit procedures. And last, evaluating the effect of uncorrected misstatements, if any, on the financial statements and informing the opinion in the auditor's report. Question number 4 is The auditor's determination of materiality is a matter of professional judgment and is affected by the auditor's perception of the financial information needs of users of the financial statements. In this context, explain the auditor's assumptions about users of the financial statements. In this context, it is reasonable for the auditor to assume that users first have a reasonable knowledge of business and economic activities and accounting and a willingness to study the information in the financial statements with reasonable diligence. Second, understand that financial statements are prepared, presented, and audited to levels of materiality. Third is recognize the uncertainties inherent in the measurement of amounts based on the use of estimates, judgments, and the consideration of future events. And fourth, make reasonable economic decisions on the basis of the information in the financial statements. Last question is, financial reporting frameworks often discuss the concept of materiality in the context of the preparation and presentation of financial statements. Explain. Financial reporting frameworks may discuss materiality in different terms. They generally explain that first, misstatements, including omissions, are considered to be material if they individually or in aggregate could reasonably be expected to influence the economic decisions of users taken on the basis of the financial statements. Second, judgments about materiality are made in the light of surrounding circumstances and are affected by the size or nature of a misstatement or a combination of both. And last, judgments about matters that are material to users of the financial statements are based on a consideration of the common financial information needs of users as a group. The possible effect of misstatements on specific individual users whose needs may vary widely is not considered.
I hope you guys enjoyed and found this video helpful. Do write your thoughts in the comments below and I'll see you in the next video with new chapter and new questions. तब तक मेहनत करते रहें और आगे बढ़ते रहें.